Good morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market webinar series. Before we get started, let's take a look at the shared disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This webinar, as all our webinars and shows, are for informational purposes only concerning Market Chameleon tools and products. One last look at the disclaimer, and let's get ready to welcome Dmitry Pargamonik to the stage. He will talk about how to analyze implied volatility percentile rank of an option today. And with that, welcome, Dmitry.
Good morning, Will. How are you?
Great.
Let me share my screen here. And what I'll do is navigate to an option chain and show an example of taking an option, looking at its implied volatility, and then comparing that implied volatility to a historical perspective. So we could basically either visualize or just numerically see, are we on the high range or low range of the historical data. I'm going to go to, let's use Apple. So type in Apple in the search box. It'll take you to Apple's main page. We're going to go to the options chain on the left-hand side. We see a menu. Click on option chain. Then we land on Apple's options chain. I'm going to close the menu or minimize it to expand our screen. And here we have the option chain for Apple with different option expirations. This one already expired. We're looking at Friday's close. We're not open yet. So let's go out a little bit further in time. Let's say we click on over here, July 3rd. And now we see the options chain for July 3rd expiration, and we have the calls, the puts, the bids and offers, and next to the bids and offers, we have the implied volatility of that option. So you could see here I have different strikes, and let's just say we go to the 205 strike on the left-hand side. This is the call bid, the call ask, and next to it we have the implied volatility of that option, 27.4 on the bid, 27.8 on the ask. And since we have this implied volatility and we have this option which is close to I guess this is like right near the money, a little bit above. The question is, for a similar option, so we have this option with 18 trading days to go, 27 calendar days. For a similar option that has, this long to maturity, this long to expiration, and with an option that's this distance away from the spot price, because you could see that we have all these different options with strikes that go further away from the money to the upside. We have options that go further away from the money to the downside, and they all have different volatilities, implied volatilities. You can see here we have some that are 44, 45, 59, 27, 32. So we got all these different implied volatilities on options that are out of the money, at the money. And then we have this question, okay, for this option that I'm looking at, 27.4, is that in the middle of the historical range, on the lower end, on the higher end, and where do we stand? So next to it, we have this IB percentile rank. Okay, and over here in the orange, you see it says 71%. And what this is telling us is, if we looked historically at observations with options that in Apple, that had the similar conditions, 71% of those observations are below 27. So it's looking at the midpoint of 27.4 and 27.8, say 27.6. So let's just click on that. And we're going to, when you click on it, it'll pop you up this IV percent rank for the call. So we're going to take a look at the data and see what this is telling us. And here we have a visual chart, and then we have a table of the data. And in the visual chart, this orange dotted line, okay, going through all the data sets, that's where the current implied volatility is sitting. So you can see if I hit the hover over that orange line, it's 27.6, which is the midpoint of the bid and the offer. And the data, these little green dots are the historical data observations. So this lets us see how many were below the current level, how many were above, just approximately. We could visualize that, and we could see the some of the outliers or ranges, how far below and above it looks like away from this dotted line. So we could see that, we have a lot of variability around that orange line. We could get, down here. Some observations got way above or up here in 2020 during COVID. And you could zoom in, by the way, with these tools over here. Okay, so if you wanted to look at maybe, in 2020, 23, wanted to zoom in, you could also do that. And this is a quick visualization that could tell us a few things. Well, if we're looking at the implied volatility of this type of option, right, an Apple with 18 trading days to go, a little bit away from the spot price, 0.4%. This is how the historical data look like relative to today's level. And we also have this table here. Just to summarize the table below, we see that current bid and offer, 27.4, 27.8. If we use the midpoint, that's 71 percentile rank, meaning you could see that 71% of the observations below are below that orange dotted line. Okay, some of them went above, and you can see some of them went way above, probably pulling the average up. So what's the average of all these historical observations? That's 25.4. So we're above the historical average of all the observations. What is the median? So the median is if we took half of the observations, if we took all the observations, cut them in half, and looked at half below this number, half above, that's 23.1. So we could see the average got skewed higher, and probably because some of these big outliers to the upside. And the range, the lowest to highest, is 12.5 with 93.1. So we could see that's a really wide range, and we're going back in history, to 2017. So that's a really long history, but you could see that that's a very wide range. And also when we look at ranges, it hit this 93.1 in our observations, but that happened one time, right? And that was a situation where you could see, I could see because of the year where COVID hit, we shut down the economy, and so all that has to be taken into consideration as well, where that was a special situation going on, and that and that's an outlier in our data set. So really quickly, I'm just going to recap how do we look at an option, right? Because we have this implied volatility for, index 30-day IV. So usually, when people say, what's the implied volatility of a stock? Well, you have this index that you reference, which is usually like, defined maybe, let's say 30 days without the money. But if you're looking at a particular option, right, on the options chain, that has its own implied volatility that could be changing throughout the day. Right, it has its own implied volatility because implied volatility is derived from option prices, not the stock price. So we have to look at a particular option and then try to evaluate the implied volatility of that specific option versus historical data set. And this is just a quick way to, reference over here, a number, on the side. And if you click on it, let's say here, 60 percentile, you click on it, this pops up a analytical view of historical data. You have your summary table up top and your visual graph of the data below. And that is, just a fast way to make an assessment from that perspective, looking at the historical range of the implied volatility of that option. So, and keeping that's looking at an observation of an option with similar 18 days to go and the distance from the spot price, which is different than tracking the implied volatility of the specific option from its inception. Because if we look at the option just from its inception, it's changing daily because the days to expiration get closer to expiration and its distance away from the spot price is changing. So this is looking at it based on where the option is now versus similar options in those conditions. All right, well, so I'm going to stop right there with that.
That was great, D. Maybe tomorrow, since he was actually talking about, was checking out Apple seasonality on the app yesterday, I guess on his phone, and that there was an interest in. He said Apple was green in July 90% of the time. So maybe we can look at the seasonality tomorrow, how you get there and how you look at it. That was just something that was brought up in the chat.
Okay.
Awesome job, my friend.
All right. Thanks, everyone, for joining. Stay safe out there, and we hope to see you tomorrow. Oh, we have a webinar tomorrow.
We do. We have a webinar too, and that's an IBKR webinar. So you need to go to Interactive Broker's website to discuss that webinar, and that's how to screen historical option strategies around earnings. Correct?
Yeah, exactly. So that will be tomorrow at 2 p.m. Eastern. You have to register with Interactive Brokers to view it. They're hosting it on their platform. If you register, they'll email you the recorded video afterwards if you miss it. But if you want to watch it live and ask questions and interact, you do have to register with Interactive Brokers. Because they're hosting it on their side.
Yep, and I just put that link in the chat, so everyone should have it. Thanks so much, D. You have a great day, my friend.
All right, thanks everyone, and hope to see you tomorrow.
All right, we'll see you tomorrow, D. Everyone, remember to follow us on all the channels. Thumbs up on YouTube, greatly appreciated. Any comments you have, put them into the YouTube chat. That's always appreciated as well. Everyone have a great, safe trading day, and we will see you tomorrow for our morning show, and then if you can, the webinar. And remember, you can always get the webinar at a later date. Just make sure you register, and they will notify you of the webinar's start, and they'll also let you have a link so you can watch it at your convenience. Everyone have a great, safe trading day. Bye.